Welcome back. Thanks for staying with us. ABSA reported a leap in half-year profit and reinstated dividend payment, benefiting from a massive drop in bad debt charges that spiked at the height of the coronavirus crisis last year. Headline earnings per share, the main profit measure in South Africa, stood at 984.6 cents, compared with just 67.7 cents reported a year earlier in the middle of its forecast range. My colleague Nastassia Arendse spoke to Punki Modise, the financial director at ABSA.
I think what you need to remember is that we're coming off a very difficult environment in 2020 when we were hit by COVID. And at that point, I think we are all flying blind, if I were to put it like that, realistically. And it's more from a point of view that we did not know what we did not know, at that point. So from a provisioning point of view, we did significantly provision, for our customers, because we wanted to ensure that we are there for our customers at their time of greatest need. And the results that you're seeing now are largely a reflection of the economic recovery that we're continuing to see. If you look at where GDP ended in 2020 for South Africa, it was, lower than 7% year on year. So we declined about 7%. And then when you look at, our current projections, we're looking to grow about 3 to 4%. So that's largely a reflection of what you are seeing in our results. Thanks.
We'll get to your GDP progressions in just a bit, but let's talk about the business units. I mean, which were the standout business units from your perspective when you look at the numbers?
From my perspective, I think the standout business unit was our corporate and investment banking unit. And when you look at that unit, to a large degree, we've seen very strong revenue growth coming through. And it's mostly on the back of the low interest rate environment. And then lots of the customers, your clients from CIB are actually requesting, hedging instruments because of the low interest rate environment. So that's the main big driver, I think, of the strong performance. And then it was followed by the RBB business, which is where I think from a provisioning point of view, last year we provisioned significantly, but this year's provisions in retail and business banking, you can see that they are coming down on the back of, a resilient, customer performance.
The one thing we did see last year during COVID is a lot of the banks became very accommodative when it came to, pricing relief for customers, loans, etc. When you look at your own data as ABSA, what have you learned so far about the behavior of your customers and where they are financially from a household credit point of view, household spending point of view, etc.?
Yeah, so we've learned quite a lot, I must say. So firstly, if I look at, the quantum of relief that we provided, it was in excess of 150 billion in relief that we provided to customers. And when that relief came to an end, customers continued, to repay their facilities, which for me was quite interesting just to observe, how quickly customers came back and they started to honor their obligations. And then I think the second key trend that we're seeing is obviously, COVID is hurting a lot of customers in one way or the other, especially the lockdown restrictions, because what you see there is that, there's significant activity decline and trends that we've become so accustomed to in the past, we don't see them, continue. One of the trends that I would talk to, for example, is that, during school holidays, generally you see elevated spend coming through. But now with the school holidays, the spend, is suppressed, and it's because of lockdown in the main. But on the upside, what we're seeing is that customers take, that money that's become available and they use it to reduce also their debts, which I think is a good thing, because then it talks to, customers who are quite savvy around ensuring that they continue to cater for themselves, in a tough macroeconomic cycle.
The one thing you mentioned is that you foresee a number of risks to the group's growth forecast for the remainder of the year. Talk to me about that and where you're seeing some of those major risks.
So I would say that, we're still in the midst of the crisis, in the sense that when you look at, our vaccination rates, as an example, that still remains fairly low in most of our markets, with South Africa also included. So that's one of the key risks, for example, that we're seeing in that, we may go into another lockdown. So that poses, I think, a risk to the greater economy. That's the one thing that we're seeing from a risk point of view. And I think, secondly, if you look at GDP, GDP growth, yes, recovery is quite strong, but I think as South Africa and also as the continent, Africa, we're still very much dependent on what's happening, globally in the overall broader macro. And when you look at, some of the developments in the US, now with Afghanistan, all of those things in one way or the other, they bring a level of risk, and that's the risk largely that we are seeing as we go forward. Thanks.
On that note, then, what will you and the rest of the team be focusing on?
So, firstly, I think our clients are foremost, in all of this. So, from a focus point of view, we'll continue to focus on ensuring that we can effectively support our clients, and we also encourage them to contact us, in case of need. They shouldn't wait until it becomes too tough for them, because at that point, it's also very difficult for us to effectively support them. So I would say that, our clients continue to remain key, and then also our communities, because I think as a bank, we fully appreciate that without the communities, the bank cannot exist. So we will continue to play a key role in supporting our communities and ensuring that they thrive in an environment that is difficult.
Before I let you go, Punki, are investors asking about the chief executive position? Jason Quinn is currently the interim group executive. Are there conversations with your team about looking for a successor or somebody permanent in the role, or will Jason Quinn be driving the ship at this particular point?
That's a very tricky question you're asking, but thanks for asking anyway. So I would say that, the board is very seized to a large degree with that question, and they will answer it in due course.